Listen to me, because what I am about to tell you could be the difference between financial peace of mind and a disaster you never saw coming. You are at a stage in your life, whether you are already retired or you are counting down the months, where you cannot afford to be wrong about where your money lies. You don't have the time to make up for a mistake. You see the commercials, you see the app on your phone, and you hear about Chime. It looks easy, it's fee-free, and it's modern. But then that little voice in your head, the one that's kept you safe all these years, asks the million-dollar question. Is my money actually safe there? Is it FDIC insured? I want you to listen closely. Chime is not a bank. I'm going to say it again because it's the most important thing you'll hear today. Chime is a financial technology company. Now, does that mean your money is at risk? Not necessarily, but you have to understand the mechanics of how this works, or you are flying blind. When you put your hard-earned Social Security check or your savings into a traditional bank like Chase or Wells Fargo, that institution is the one with the FDIC certificate. If that bank fails, the government steps in up to $250,000. With Chime, because they aren't a bank, they can't be FDIC insured themselves. Instead, they partner with real banks, specifically the Bancorp Bank, NA, or Stride Bank, NA. Your money isn't sitting in a vault at Chime headquarters in San Francisco. It is passed through to those partner banks. This is what we call pass-through insurance. So, to answer the big question, yes, your deposits are FDIC insured up to $250,000, but only because they are sitting at the Bancorp Bank or Stride Bank. Now, why should this worry you? Because if you don't know which of those two banks is actually holding your money, how can you be sure you aren't over the $250,000 limit across different accounts? Many of you have money tucked away in different places. If you have an account at Stride Bank and then you open a Chime account that also uses Stride Bank, you might think you have $500,000 of protection. You don't. The FDIC limit is per depositor per insured bank. You could be hovering in a danger zone of uninsured cash and not even know it. And let's talk about the fear of the middleman. If Chime, the app, the technology company, were to go out of business tomorrow, your money is still at the partner bank. But here's the catch. How quickly could you get to it? When you use a fintech, you're relying on their systems to access your funds. If their app goes dark, you aren't walking into a branch to talk to a teller. There are no branches. For someone in retirement who needs their money for property taxes, for supplemental insurance, or for daily groceries, a temporary technical glitch isn't just an inconvenience. It's a crisis. So, here's your actionable takeaway, and I want you to do this today. First, open your Chime app or look at your last statement. Look at the very bottom in the tiny print. It will tell you exactly which bank is holding your funds, either the Bancorp Bank or Stride Bank. Second, check your other accounts. Do you have a secondary savings account or a specialized credit card that uses those same banks? If your total combined balance between Chime and any other account at that specific partner bank is over $250,000, you are not fully insured. You must move that excess money immediately to a different institution with a different FDIC certificate. Third, never make a fintech like Chime your only source of cash. I don't care how much you love the no fees. You must have a lifeboat account at a traditional brick-and-mortar bank or a different credit union where you can walk in and see a human being. If the digital world has a hiccup, you need to know you can still pay your bills. You have worked too hard and waited too long for this retirement to let a lack of understanding put your security at risk. Check your partner bank, verify your limits, and keep a backup. Stand in your truth and protect your money, because if you don't, nobody else will.